Hello guys, I'm Mariano, the Trading Parrot. On Friday, a new report came from the Federal Reserve touching monetary policies. There are some mentions specifically announcing some changes when it comes to quantitative easing. That might be the case that is coming a slowdown on quantitative tightening. In today's video, I'm gonna share a very quick summary in what it means for crypto investors, traders, not just when it comes to Bitcoin, but also in regards to all coins. This can have profound impact even if it didn't play out. We are talking about potential front runs when this hits the markets on Monday. We have a pretty packed week when it comes to economic calendar. We have the core inflation rates. On Tuesday and Wednesday, Powell, PPI and retail sales are already coming in by the end of the week. We're gonna cover the state of the open interest aggregated, which is diverting from the alpha that I really want. We'll cover the capitulation signal ongoing from hash ribbons. And of course, I'll give you an update on the 4-hour and daily time frame, which seem to be trapping both sides at the moment. But the most pain is very clearly located in one of the two extremes. We're gonna discuss my take on that. There are three most likely potential outcomes, but I lean on towards one of them. Of course, we will cover liquidation levels. And at the end of the video, we'll wrap up all this information together with doing surgery to the order book to extract the most critical information to stay informed for your trading starting on Monday market open. Guys, if you like this type of content, make sure that you're subscribed to CoinBureau Trading. Together with Dan and Aaron, we put valuable information, not just talking about trading setups and education, but also tutorials. So every day you can become a better trader, incorporating new alpha in your toolset. Alright, let's go back into the content. As usual, I'm gonna share a long array of data points. There's gonna be conflicts between each one of them. I have a mental reminder to make sure that I always state whether it's bullish or bearish and how significant and impactful it can be. Let's warm up with the place I always like to start, which is to understand how much retail currently we have. And you can tell that since mid-November, retail has done nothing but put in lower lows and lower highs in terms of interest over time when searching for Bitcoin. You can even tell that Trump starting his administration, there was a spike, but that was just only a new lower high. At the moment, the latest reading is 24. If we were to trade this pattern, we could say that we are in a pretty bullish flag and we should be exploding into over 75 if this was price action. And you know that I don't do any discrimination in this channel. I pretty much trade patterns on anything. And this is saying that eventually retail could come. And the reason I'm covering this is because this is completely connected with the report that is coming from the Fed. Everything fits as long as the report ends up doing what they are promising. So now we are gonna read the 80 pages of the report word by word, and I bet that you're gonna stay the full video. Of course not. I have prepared a nice article that I share with my community, and I made public a tweet as well that went into my Telegram and Instagram. I usually try to extract what really matters so you stay informed. And in that PDF, the things that we really care as investors and traders in crypto is that they have confirmed that they are going to slow down. They don't give a timeline. I've seen some people saying, other influencers, it is confirmed and starting from June, quantitative easing is going to take place. I scanned everywhere the document, I gave it to all the AI models, and I couldn't find anything saying really a specific deadline for QT. But it's good to know that in the short to medium term, they have agreed already to do so, which means that somewhere in 2025, we should expect higher risk appetite, increased liquidity in the markets. And if you've been watching my channel, probably since the past 6 months, I keep repeating and repeating. Yes, guys, we definitely can enter into an altcoin season, but since the liquidity is so low, we are running so dry on that liquidity, and there is millions literally of coins during this cycle. Any altcoin season lasts very short, and indeed, that's what happened in here. We were waiting for altcoin season all this way, we entered in altcoin season, and the disappointment was devastating. Just 9 days of happy ending, and then an ugly, disastrous ending for pretty much all the coins with a few exceptions. Many of them taking the highs and the lows prior to March 2024, almost looking like already in a bear market. Now, looking at what the balance sheet is doing in here, you can see that we have a double bottom formation, meaning that this, in a way, doesn't conflict with the report. The report says the cuts in the balance sheet are gonna start slowing down. If we look at this pattern, this seems to be a bottom information, meaning that I wouldn't say that they are lying and sending you a report publicly saying that they're gonna slow down, but actually they seem to be still selling aggressively. They put this high, which constitutes a breakout to the upside, meaning that they are adding to the balance sheet, and we got this low that is higher than that one. So far with these weekly readings, we are going in the right direction. Very slow, very shaky, and scary to be here. And I got my 10 eyes on whether this actually takes the lows and continues in a strong tightening monetary policy instead of losing and pointing to the upside. Bitcoin, risk on assets, and in general assets follow moves of the balance sheet. So when you get these explosive moves, everything moves up, and that's where you get your altcoin seasons and everything. Just keep in mind that things have changed. So even if we had that pump, do not expect any potential altcoin season to look precisely the same as before, because it's not just about the liquidity coming in, the monetary policy. We have more diluted market, more coins, and this is definitely an institutional-led cycle. Let's touch base very quickly on this. We cover it every day in my channel, so I just want to make sure that you're keeping track. The liquidity pinch in here, the hunt for liquidity that we did in August 2024, that opened my eyes, punching me in the face, telling me it is now very likely that we are gonna break out from the top of the megaphone pattern, and that's where we were adding to our positions aggressively, is when we recover the support of 15.6 billion on aggregated open interest. And that's why I've been keeping an eye on this one in here when we pinch the 27.7, expecting hopefully that we can repeat the same plate, recovering above 28.7. But it's been a bunch of days that we just stay below and we haven't really gone back inside. The longer we stay below this level, it is calling for an additional downside. We'll talk more about that. This is just to keep you updated that we do not have yet the full confirmation from this alpha giving us that bullish signal that we want. Hash ribbons seems to be on its way to a full recovery very quickly, very similar to what we did around October. We have the bearish cross on the 6th of October, and roughly around 12, that's less than a week, we were already printing green, which is not the actual signal. That just says we got the bullish cross, and then we get the blue signal, the buy. On the daily time frame, that has a huge win rates. There is some drawdown, particularly two signals back in time. There was this one that lasted 70 days. But you can see how quickly we put out that green and we are back to mouth wide open. What can happen after this? If things don't go as fast as they are now, we could put another bearish cross and then enter back in the red in here and take a little bit longer. Indeed, even though this was fast, there was one more bearish cross right after. We just spent 1 day there, but it's very typical to do these fake outs in here. For example, in June 2022, again, you have a fake out somewhere in the middle. So don't take for granted the blue following up immediately after a green. A green is promising, pay attention, wait for the blue, wait for day close candle. But if you don't get the blue, be open for additional sideways to bearish action until we get that buy. Alright, let's go into the core of the show. I talk about 3 potential scenarios that I'm gonna summarize today. Scenario number 1, there is some immediate liquidity right below the price action during this weekend. That liquidity in the short term is quite heavy, and I think there is a chance that around Monday, maximum Tuesday, we have taken that liquidity below the price. Scenario number 2 is we get a Monday that is not necessarily bullish and it pushes back down beyond that liquidity right below the price, and we are talking about way lower levels in that case, 88. And the third scenario, which is the scenario where people start learning about the report from the Fed that there is this potential quantitative easing, and they start in the general markets trying to front run that situation, and we even leave the liquidity below us immediately underneath. Okay, knowing those 3 scenarios, let's now focus on all the data, all the surgery that we need to do to the order book to extract the bits and pieces, data points that could support one or the other. By the end of the video, I'll give you my preferred choice and my preferred plan as well. During the unemployment report on Friday, there was a fake out. I was on a live stream in my channel and I encourage people not to enter on this breakout of the price because the RSI was not confirming the breakout. Right after that, we hit 100K, we got a rejection. Very quickly, people understood that they were being part of a liquidity hunt and that price was most likely going to go beyond the support, breaking down from the symmetrical triangle. And that is what we did. In yesterday's video, I talked about the exhaustion of the shorts, explaining that as we came out of the meeting, in terms of volume, you can tell on Friday, these candles in here are barely being able to stay beyond the moving average applied to the volume. Immediately after, on Saturday, well, we typically get less volume as well, but price started hovering around the 95.8 support, which was resistance in here and resistance in the past as well, resistance and support. And we ended up forming a double bottom right there. This double bottom at the moment has called the attention of a lot of longs, and as a consequence of that, you can see how much liquidity it has trapped in the short term for the longs. And that's why, to me, this is an area of interest. More or less, we could say that around 95K, it is very attractive to me for a long. The risk of waiting for that long is that the market is going to learn about the Fed starting to consider changes in the monetary policy, less tightening, and it could be the case. There is, I will say, a 30% chances that if they want to stray away, launch the front running of those news that are bullish, that the price does not go to 95K. That could happen because this is short-term liquidity, and even though it's displayed in red in here, if we zoom out, you can see that it's not as big as other liquidity. Number 2, in the longer term liquidity, the one you can see up until 128 and the liquidity that starts from 88 and below, you can tell that what we are leaving behind relative to the big picture is not such a big deal. If they were really bullish and they started thinking, let's just get on with this and pump the price, they are very bullish news, let's front run it. So now I'm gonna show you my lines from yesterday where I mentioned, this line is from the video yesterday, mentioning that thanks to the slowdown of the volume of the interest and the strength of the shorts, they were getting exhausted. Indeed, the title of my video is Shorts Getting Exhausted, and I was expecting to see some attempt to break out. And here's where it gets really interesting. We are in the middle of a weekend. If you've been trading Bitcoin, you know that it's not great to have a pump over the weekend. There are markets like CME that have substantial volume and influence that when things happen over the weekend and they are close, it generates gaps, and those gaps create imbalance, and then they need to get filled. Eventually, they have high win rate and performance in that sense. So right here at 1 AM, we already pinched that resistance. You can tell how significant still is the resistance You can also tell how different is this scenario of this white line versus this white line in here. This was an immediate rejection and back to the bottom. This one has tried multiple times. We had the line like this, rejection, no, let's try once more, and the price sticks below the resistance. It really wants to break out. Indeed, the traps were to the upside to trap the longs. We came back down and we still are pending there. If this was really bearish, we should be doing something like this very quickly with big volume. That is my main point. And we are on Sunday and we are in such a pivotal moment. The full week, every single video I put out was about the point of control, and I felt like I was probably bombarding you guys too much talking about the point of control. 3 days of support, 4 days in a row of resistance against point of control. And today, after 5 daily red candles, we have a green right below the point of control. I'm sick and tired of that point of control, and I really want it to either reject us to the bottom of the range, to the low 90s or to 88 where the liquidity is, or let's close a proper massive green candle in here, breaking that resistance, confirming as well that we are going to the top of the range to 104. On the RSI daily, a rally right now into 58, which will be our immediate resistance on the daily, can take the price more or less around the top of the range. At the moment, that is 103.6. It is a moving target. There are plenty of fair value gaps to take to the top. We will look at them just in a second. If we had the rejection from the point of control there, we have the perfect target for the short as well. That is around 88.7 to around 87.2. We have this yellow liquidity, which is a spike that you can see on the right hand side. Today, to get there, the price needs to move 8.2k to the downside. The analysis on the weekly, it will be really great that the bulls step in and learn about the quantitative easing, and maybe some of them get interested in front running this on a weekend, and potentially that could take the price back to the bullish area of the range. That starts from 98.3. That has been strong resistance on the weekly, and is the best chance that we had to invalidate the double top, which at the moment we are not in a position to ignore that match. We already put a close on the weekly at 97.6, so we have broken that line, and now we are in this indecision candle right below the weekly resistance. The technical target of this double top from the neckline of 93.577 is 80k.6. But if this is the first time that you watch one of my videos, you know how much I love to challenge technical targets that are across all the channels of influencers. Whenever they say head and shoulders, double top, and you see copy pasting of the same technical target in every stupid channel, that is where I make the best contrarian trades. And you can get a contrarian trade potentially longing in here and still going up, or if you form the neck and you pinch lower in there, you can go to the 90s and still go up as well. Very recently we have a technical target to 75k with a head and shoulders, and that's precisely what we did, and we took the long. I couldn't fill all my safety orders to the downside, but I still managed to get to 106 and take advantage of that. Very important update: if you don't watch my main channel and you haven't seen this, this is a must. We've been on the SOPR oscillator on the lower end of the bands. This is the area where people close positions at a loss. Too many people closing at a loss is a signal for a local bottom. And during this week, around Monday, we pinched the bottom band on Bitcoin. Right now, we are very close to pinch it again on Sunday, and Ethereum has been having a blast hitting the lower end. The amount of people closing at a loss has not happened since August 2024, when we were again at 2.1k. So at those levels, my perception is look for longs here and look for exits or shorts at the top end. So if you are thinking to short these levels and you are already in an extreme level of people taking losses, what are you really shorting? You have a chance to profit from that short if the general markets and everything crashes together. Sure, at that point there is still downside, but if that doesn't happen, market maker is gonna say, okay, we are done with this, now let's swing it back up. Let's convince fresh meat to fall into the trap. That is the mechanics of this. If you're not aware, you shouldn't be trading. CME on Friday closed at 96.3k, and this is one reason for me to not want a pump on Sunday. Such a low close, 96.2, which on Binance is 96, give or take, doesn't really make a front-running setup on Sunday a great option. Why? Because if people start front-running this, and let's say before midnight today, Sunday, we went to, let's say, 103, 102, and we take 107.90 or maybe even 102.7, which we were looking a few days ago. Then we get a huge CME gap to the downside, and we already have some other ones at 77, 78 that many people forgot, but is still there potentially for the summer, and many traders are going to count on that getting filled. Therefore, it acts as a magnet. There are imbalances on the Chicago exchange that typically get filled. And that's why I approach Friday with the strategy of entering low volume at these levels. I still have an interest in entering somewhere in here with low level, low size, and use risk management in case something breaks in here and we still go to the heavy liquidity at 88. My point is, I will never enter here along, trying to overlook the chances of going there and just saying it is impossible. That is just not my trading style. Unfortunately, I see loads of people that they use that. If you don't believe me, just look at the numbers of liquidations that we had when last week Ethereum went to 2.1k. My comments were full of people with leverage trades wiped and accounts fully gone. Another thing that is at the moment still bullish on our side for a swing to the upside is the futures open interest percent change oscillator. This indicator takes in consideration statistics around the open interest in the short term, and whenever we are below the orange line, it's a local bottom or very close to a local bottom. Above the blue line is a local top, and you can take a screenshot and see more or less the past performance. Typically, when it finds a bottom and it starts curving back up, that is the most precise signal. And if you are able to see on the lower end, you can see that now it's curving back up, meaning that it has potentially found that bottom, and we are already seeing some positive moves on the price. My word of caution at the moment is that 95k liquidity that we have on all this area there is quite red, and nothing in this range in the short term compares to that. So if you cannot resist the temptation of now entering on a long, which I won't be doing because I don't like chasing price, whatever you do, make sure that you don't add fuel to the fire in here, right? Don't put your risk right there, because we already can see that that is just too attractive. And if you miss my videos on the week, don't worry, this is part of the summary for Sunday. We talk about inflows from large holders multiple days during the week. Across a span of 2 to 3 days, we saw a delta of 70k of additional deposits from large holders. That means that at the moment, large holders have a big gun pointing to your wallet with 70k that they could potentially dump into the market. And knowing that next week is data heavy, right? We have all these reports from the Fed coming in, inflation rate and all of that. We could assume that maybe, just maybe, they're doing this as a precautionary measure. They're putting it there in the exchange just in case something breaks big. So far, they didn't sell with the unemployment rates. So we could argue that maybe they're waiting for the reaction of the Fed before they do something with that. And now that we know that there is that risk, I can also continue to monitor these metrics and these spikes on deposits from large holders in case we revert the situation. If I focus on outflows and we see a spike that compensates for that delta of 70k, meaning that they are now deciding that it's not worth keeping those coins in the exchange and they withdraw them back into cold storage, I will let you know immediately. And that is gonna look in my indicator, the Big Well Explorer, as another depression out of the ratio of 1, hopefully cooling down back into the accumulation territory, which is where we came from just a few days ago. We are still in fear in the Fear and Greed Index. A few days ago we were at 44, now at 46. Fear in a bull market, it's more than 90% an opportunity, and you know that we have a routine that we respect consistently. If we are in extreme greed, every morning we head down to the kitchen, we prepare 2 strong black coffees, we down them, then we look into the mirror and we slap ourselves 3 times in front of the mirror. This methodology has helped tons of people in my channel. You wouldn't believe it. The last time we were at extreme greed was on 31st of January, and we use this activity to remind us ourselves that on those days of extreme greed, we are supposed to be looking for exits. And if we don't execute the exit, at least we are planning for it. We have it on the table. We know what we need to be doing according to your own risk aversion. And we do the opposite. When we are in fear in a bull market, we shake off the fear and we start looking for data. We do data-driven trading. And that's how we keep a good win ratio, and we stay away from emotions as well. Looking at CoinGlass, you can see a confluence as well of that risk very close to the price. If you focus your eyes in the close proximity to this red dotted line, you can see that we have this chunk in there, which is the risk of these new longs I mentioned on Trading Different, the website that has been accumulating from the time that we hit for a second time 95.5. There is a low hanging fruit for profit taking at around 106. That depends on what's your strategy. If you're aiming for short-term longs, around there will be the first profit taking, if not 100%. As I say, it all depends on your own personal preference. But if you are very aggressive, we could be looking into 106.5. Let's start doing some surgery in here. We're going to look at the order book and see what we can find. Last night we had a spike in the funding rates. They went negative. That is typically a buy signal. It didn't stay for very long like the previous time in here that was flagging a bottom. Longs are still quite high, but now we are seeing a slowdown there pretty much every time that we hit a high and the price goes low. If that is in confluence with other indicators, it tells us that that is a local bottom. On the bid versus ask liquidity, we still don't have any significant alpha that we can take away and use to support the bullish thesis, neither the bearish one. The last time we had a spike in bid was in here, flagging a bottom, and then we got a spike of ask liquidity at 101 that I share in my channel on my social network, and that was the local top as well. We have a flip now of the delta of liquidations in the very short proximity of the price and short term. We have 200k of shorts more in risk. So you got a big, nice group of alpha telling us that there is upside. We have that on one hand. We have the risk of the CME being at 96 priced in Binance, and I don't want to enter in the long being part of the front runners. I know I might regret my decision, but I am so disciplined. That is my plan. If we get the chance to enter a 95, I enter with my order. I'm going to be looking if we start closing that CME gap at 106 and reassess the potential to fill my order at 105. The heavier this gets, the more I like the idea of keeping my order there and not chasing this recent move. Of course, you do what you need to do. You have the same information as me. Now you know my bias, my plan, but it's always about what you decide to do by yourself. Another thing that I still don't like with these moves that are positive in the market is, number one, we do have strong resistance at 102 with 73 million. At 110, we have 107 million on Binance futures. We have 50 million at 100k, and our support is not very thick. in this area starting from 93. I'm not convinced we're gonna go there, but psychologically seeing not support, even if you don't go there, has an impact on how people approach this. And you can tell that the orange wells, which are 100 to 1K, you can see that they are leading the move up. They are the ones buying at the moment during this weekend. You can see purple and brown, that are these ones in there, are really not doing anything at the moment. So if I join and I want to be front running, I am front running being part of the losing group, not of the smart money. And that is another thing that I tend to want to do. If I enter on a trade, I always look kind of trying to cheat. What are the smart money, by the way, doing, right? I don't want to enter in a long if they are shorting me, because they are the smart money. Not that I'm not smart, but being smart and doing the smart thing in this case is at the very least be aware of what the smart money is doing. Continuing with dissecting this dead body, we can find in here some tumors at 101K with 800 of volume. So they are placing their bets to short, also at 105 and a little bit less at 114. Below the price, there is some appetite at 91.5 and going lower at 78 because they've been trying to fish that CME gap since 8th of January. And we're gonna close with the fair value gaps, guys. And the alpha today from the fair value gaps is pretty interesting. It doesn't happen very often. And when it does, it is kind of a mental arm wrestling. Let's see what we have. We don't have around the price many fair value gaps. To the downside, we only have 85.1. To the upside, we have a thin one at 100.8. And then we have the thick one above us spanning from 102.7 to 104.1. We need to wonder ourselves, where is the liquidity at the moment? And you can see there is liquidity in here, but as you start going lower into 92, 91, in the past 30 days, it starts diminishing. And in the longer term, it starts from 88.9. That is where it is very heavy. Shorter term shows also that this liquidity in here and not much to the upside unless the plan is to go to 100K. So from here, we can take decent liquidity if we either go to 101 or if we take the pending liquidity right there, which doesn't overlap at the moment with any fair value gap. So in terms of fair value gaps and ignoring the liquidity, I will say that the most likely scenario is to go to 101 at some point during the next week. My take on this is I do not like the heaviness in here and I prefer to go take that and then go to the upside. Alternatively, if we hit this liquidity and we fail to go there and something breaks in the general markets, dragging the whole crypto market down, my preference is to leave a decent chunk in case I decide to add in here, or I stop loss somewhere below my entry so I can re-enter with more volume at those discounted prices. Of course, the plan can change. You know I'm data driven, so every day I look at the data, what I'm telling you today. If you look away for the whole week or you don't have access to this data, you might come back and you might learn that I ended up publicly saying that my plan effectively was different. Tomorrow, I'm gonna keep a very close eye on market open. I'm gonna do probably a report including general markets. We usually review DXY, dollar, VIX, Nasdaq, and S&P, followed by some big tech stocks. Pre-market is gonna be something I can use to sniff that sentiment coming out from that report on Friday from the Fed. I'm planning to make a video on Ethereum as well. That's gonna go to my channel. I think big things are happening and coming in for Ethereum. Guys, if you want to trade Bitcoin, Ethereum, altcoins, you're not gonna find better deals, larger bonuses, or lower trading fees anywhere compared to the ones that we have in the description down below. Starting with Bybit, 60,000 in bonuses, OKX 20,000 in bonuses and 40% fee discount. If you want to stay away from KYC and needing to use VPNs, at the moment we have a pretty good bonus with 2bit of 9K and CoinCatch $5,000. Thanks so much for watching this video. I'll see you in the next one. Bye bye.